I think that eventually Bitcoin will reach stable prices, right? And
At what, $1 million?
why so low?
10.
I mean, I've said it publicly. There's no doubt in my mind that Bitcoin will be worth $100 trillion at some point from a market cap perspective, right? 100 trillion.
Yeah.
And so if you look today, that would be larger.
And you're comparing that off of what, gold and other assets?
No, so just right now, Bitcoin's about a $700 billion asset. Back in March or so, Bitcoin had reached over $1 trillion. So 100x off of, let's call it a $60,000 price point or so, right? Start doing math on that. That's a big number, obviously, $6 million. But the reason why I think that is, it's a market expanding technology. Bitcoin is not simply going after the global monetary supply, right? In terms of it has to steal market share. At some point, Bitcoin can be successful and so can fiat currencies, right? In terms of they both continue to have large market caps. Bitcoin will eat into gold's market share. So gold's market cap will draw down as people move to Bitcoin because it's kind of a superior store of value with sound money principles. But it's also going to eat into other store of value assets. How many people right now around the world say, I was going to take this money and buy real estate, but I'm not. I'm going to buy Bitcoin. How many people say, I was going to buy that piece of fine art? I'm not going to because I'm going to buy Bitcoin. How many people around the world say, I was going to buy that commodity or that precious metal or some other store of value? I'm not going to do that because I'm going to buy Bitcoin. Because Bitcoin provides the exact same properties of scarcity, but it also has a digital component to it. It's portable, it's divisible, it's secure, it's transparent, etc. Right? It has all these advantages, but it still has all of the same properties that you would need for those other assets. And so when you look at Bitcoin as sitting today at a $700 billion market cap, you start to say to yourself, wait a second. The likelihood that Bitcoin is not going to be bigger than gold is very, very small in my opinion, right? Not financial advice, just that's how I look at the market. It is a digital application of sound money principles. Gold is an analog application of sound money principles. The digital version is always bigger than the analog version. And so therefore, Bitcoin should be bigger. Right now, gold's at $10 trillion market cap, give or take. I do think it will contract and Bitcoin will be superior. But even if gold didn't contract, that means that Bitcoin would be more. And so when you just look at that alone, that is a very high price point, hundreds of thousands of dollars for a Bitcoin, right? And I don't know what the time frame for this is. It can take a long time for it to occur, right? It could take years or decades. I don't think so, but it could. And so when you start to understand what is Bitcoin, not only is it the easiest supply demand trade of all time, not only is it clearly programmatic so that the supply side is constant, known, and transparent and verifiable, but also demand is only going to continue to increase for an asset where today it's estimated about 100 million people own Bitcoin or are interested in Bitcoin, and there's 7.5 billion people in the world. So naturally, you just get the tailwind, the demographic growth, and kind of the interest of folks coming into an asset. You get a repricing the asset. And I think eventually Bitcoin's going to end up with some really, really high price point in US dollar terms. But ultimately, people are going to start pricing assets in sats, and that's what's going to matter. Not so much what is the US dollar exchange price. Yes. John, you're looking at me like your head's like spinning right now.
No, that's
He heard
interesting
$1 million
to see.
and he stopped thinking that.
I started thinking of a house, a boat. No, it's interesting to see because it's really what people have been saying for a very long time, right? That the allocation of capital is diversified, and adding another asset means that other asset classes will decrease as people allocate money to Bitcoin. I read something today that said that only 2% of gold's market cap has basically been allocated over to Bitcoin, and I'm curious to see where that goes.
Well, I would argue that this is the exact reason why Bitcoin is the apex predator of financial markets, right? Bitcoin is eating into the market share of other assets. Bitcoin is up 250% over the last 12 months. Gold is down 10%. Some portion of that, people sold gold and bought equities. Some people sold gold and bought dollars. But some material portion of that, people sold gold and they bought Bitcoin. You can see that GLD, the gold index, was pulling down at the exact same time that Bitcoin's was ripping up, right? That is people dropping gold, buying Bitcoin. At the same time, Bitcoin is doing that to other assets as well. How many people around the world sold a piece of real estate, sold a commodity, sold a precious metal, sold some other asset that they had, took the capital and put it into Bitcoin? If you have an asset that provides store of value in a digital form, is still as portable, divisible, etc. as Bitcoin, but has the scarcity and the transparency, the discipline, the programmatic nature of it, people around the world, as they learn what this is, say, this is all of the risk mitigation elements that I wanted out of real estate or gold or whatever, like a hard asset kind of criteria. But it also has the influx of repricing in the world, which remember, gold got repriced in 1971 when we came out the gold standard. I think gold's price was like 30 or 40 bucks. Today it sits at, over $1,500, $1,600, $1,700, $1,800, wherever it is. And so that asset over the last 50 years, give or take, got repriced as people tried to determine what is the value of gold. Bitcoin is going through that right now. We're 12 years in, has been the best performing asset for the last 12 years. My guess is that the world has not even come close to figuring out what this is going to be worth. And so that's what ultimately I think is the Bitcoin thesis is the world needs an asset like this. The world is waking up and learning about it. And therefore, here comes all this kind of institutional capital into the space. And that's what's going to propel price much, much higher over time.
Yeah.
What do you think is more important, institutional capital or essentially not worldwide adoption, but retailers worldwide?
I think it serves two completely different purposes. So when you look at the retail investors and kind of holders, everyone looks at it as a currency. I do believe Bitcoin will become a true, fully adopted currency, but I think that it's a sequential thing where you have to get store of value first, and then you can get medium of exchange, right? And you'll get much more medium of exchange if it's a good store of value and you got some level of kind of price stability. And so right now, that's what we're watching. Is the world is trying to price what is this new digital global store of value, right? What is that worth? At the market price today, it's $720 billion. I think that is drastically underpriced, right? I think it's going to be worth way, way more than that in the future as more and more people learn what it is. The institutions end up being part of that pricing mechanism. So the individuals, they're really important from a decentralization standpoint, right? We need millions and millions, tens of millions, hundreds of millions of people around the world holding Bitcoin so that it's not all concentrated and centralized in just a couple of banks' hands or a couple of, very wealthy people. Instead, what we need is as many people as possible. And I think one of the statistics that I saw back at maybe in December, and so we'll have to go back and look at the exact data, but I think it said 66,000 Bitcoin wallets hold at least $1 million worth of Bitcoin in them. Right. So one way to kind of think about that is there 66,000 millionaires that were created through Bitcoin? Maybe that's not so effective because that would have meant that you bought it literally at a penny an ounce worth $1 million, like total value creation. Instead, what I think is likely is you're starting to use measurements around actual decentralization of the ownership. And those large organizations, they're going to help propel the price higher because they're going to have to put big dollars to work. But the individuals are important from a decentralization standpoint. Hey guys, thanks so much for watching that clip of the Best Business Show. Make sure you like and subscribe to the channel, turn on notifications so you know when we go live every weekday, and then head to SoFi.com/pomp so that you can get an account and we can get after it.